Hello and welcome to the weekly technical analysis review. I'm Andreas Georgiou, currency analyst at XM.com. Today is Monday, August 7th, and we look at the Australian dollar versus the US dollar, the New Zealand dollar versus the US dollar, the US dollar versus the Swiss franc, and gold on the daily charts. So starting with AUDUSD, we can see that it's been falling in today's trading, and should it finish the day lower, then this would be the 5th straight day it would do so. The RSI indicator is adding to the negative short-term momentum. We can see that the indicator is heading lower, and it has been heading lower throughout this period of declines for the pair. Should the pair indeed continue declining, then the area around the 38.2% Fibonacci retracement level of the July 7 to July 27 up leg at 0.7876 could act as support. Should the price fall below this area, then additional support could come from the 50% or from the area, I should say around the 50% Fibonacci mark at 0.7817. If on the other hand the price rises, then the area around the 23.6% Fibonacci mark at 0.7948 could act as a resistance. Notice that the price rose close to this level earlier in the day before falling back below. If the price breaks above this area, then the 0.80 mark, which was of significance in the past, we can see that this was a congested area in the past, could act as an additional barrier to the upside. In terms of the medium-term picture, it is predominantly bullish, with the price comfortably above both the 50 and 200-day moving average lines, while the pair also recorded a bullish cross, otherwise known as a golden cross, in mid-July when the 50-day moving average line moved above the 200-day one. Moving to QE dollar on the daily chart, we can see that it's giving a similar picture to the previous pair, indicating the positive correlation between the two pairs. Now moving into the specifics, we can see that it's declining in today's trading. Specifically, it contracted by 0.8%, or I should say it's currently down by 0.8% on the day, while it also hit a near 3-week low of 0.7351 earlier in the day. We can see that the RSI is falling, and in particular it has fallen below the 50 neutral perceived level, and it is currently at 48. Should the price continue declining, then the area around the 61.8% Fibonacci mark of the July 11 to July 27 up leg could act as support. Further down, the region around the current level of the 50-day moving average at 0.7296 could provide additional support. If on the other hand the price advances, the area around the 50% Fibonacci mark at 0.7377 could provide a resistance. Notice that this level failed to provide support earlier in the day and could instead act as intraday resistance. Further up, the 38.2% Fibonacci mark at 0.7421 would be eyed as an additional barrier to the upside. In terms of the medium-term picture, the pair is looking positive. The price is currently above both moving averages, while the pair also recorded a bullish cross in early July when the 50-day moving average moved above the 200-day one, though notice that the price is currently close to the current level of the 50-day moving average, and should it cross below, then this would weaken the bullish structure for a more neutral one. Moving to dollar versus the Swiss franc on the daily chart, and looking at the MACD indicator, we can see that it is positive as well as above the red signal line. This points to the bias being overall on the positive side. Should the price advance, then the area around the 1.5 month high of 0.9763 recorded last Friday could act as resistance. Further up, the 0.99 handle, which was of significance in the past, could provide additional resistance. If the price declines, then the area around the current level of the 50-day moving average at 0.9647 could act as support. In terms of the medium-term picture, it is looking predominantly bearish given the significant declines in the recent months, though with a neutral tilt after the price recently crossed above the 50-day moving average line. Also take into account that the pair recorded a bearish cross in late May when the 50-day moving average moved below the 200-day one. Finally, moving into gold on the daily chart. And looking at the stochastics, we can see that the percentage K line is steeply downward sloping as well as below the percentage K line. This is suggesting that momentum in the very short term is to the downside. If the price declines, then the near 2-week low from last Friday and the current level of the 50-day moving average, ranging from 1,254.07 and 1,250.92, could form a support area to the downside. If this area is violated, then the 1,255 level, or the area around this level I should say, which was of significance in the past, it was a congested area in the past, could provide additional support. If the price advances, then the area around the 1,269 level, which was also of significance recently, could provide resistance, while a break above this area would shift focus to the 1.5 month high of 1,273.96, which was recorded last week. And concluding with the medium-term picture, it looks predominantly neutral given the significant sideways ranging over the last number of months. That's it from me. Thank you for watching and have a great day.